Good evening, everyone. Anna is here, and it is Wednesday. And you know what we do on Wednesday? I want to welcome you to a money date. Today we're talking about ways to improve your credit score. Now, we all know what happened not too long ago, the famous Equifax breach. And so I want to kind of continue the discussion on that. Hi, Lori. Thanks for joining. Hi, Natalie. Thanks for hopping on. So good to have you here. Hi, Jim. I'm playing you a Russian song. How about that? You guys? I know you're not used to that kind of music. This is, hi, good to have you, Jim. This is one of the artists that my dad likes quite a bit. So, wish you can understand, but I'm sure my Russian friends could. It's not a money song. I just like the words of that. So, well, money date. Why do we get together and why do we have conversation? Hi, AJ. Thanks for hopping on. Okay, so I designed a money date because I wanted to have a time in my schedule for myself so that I can come and have a check-in session, you know, to figure out what is happening, what is going on. Now, a lot of times I hear from clients, from friends that, look, I don't have a whole lot of finances to attend to, right? But that's okay. The idea is not to have a lot. It's a good idea. It's a good position to be in. But the idea is to stay on the top of what you already have. Okay? So that's why I want to be here for you every Wednesday at 6 o'clock Pacific. Okay. Now, just because we get here and discuss interesting topics and share our money wins doesn't mean that you don't get to do the work in the background, because as you know, everything hard in life requires a lot of preparation and a lot of hard work. So why do I want to stay on the top of this? Well, I want to do this for myself. I want to do this for my family, but I just as equally, I want this for you. Hi, Yuri. Thanks for hopping on. So what do we accomplish on money dates and what do we actually track every week? Now, for those of you who've been joining me for some time, you guys know, hi Lisa, thanks for hopping on. You know that we need to track how much income we make, right? That's one of the important factors. We also need to track how much spending happens. So because then at the end of the day, we will know how are we doing, right? Where do we stand? And this is very simple to do on a weekly basis. Now, we also need to know what our savings goals are, because if we don't have targets, why are we doing all this hard work? Okay, so those are the three variables that I want you to be paying attention to, right? Aside from everything else that's going on. And there's a lot that's going on in our finances, in our life, and so forth. So every week that we get together on a money date, I check and make sure that I am staying on track. Now, I've shared with you before how I do that. Mint.com is one of my favorite tools that I like to use. So that gives me the answers to all of those three questions, and I don't have to do anything else, right? It's the awareness piece that we are after, okay? I was talking to a client earlier today, actually to a prospect, and they asked me to tell them, right? Because financial planning process seems a little bit intimidating, sometimes boring to people, but we all know we've got to get some of these things done. It may not be the entire financial planning process. So that she asked me a question, say, well, you know, what is the real thing that you get out of working with somebody like, you know, like our firm, like myself, right? And I think the best answer I could give her at that moment was that clarity and knowing where you stand. Because you could be doing really good. You could be earning quite a bit of good money. You can be staying really good with your spending, but if you don't have targets, if you don't have goals that you're hitting and all of these pieces aren't connected, then what is the point? Okay? That's never going to give you the clarity. So my goal for you guys and gals is to have that clarity. And the only way is to have that clarity is to stay on the top of what's happening. Okay? So that's the idea behind money dates. If you're new here today, I applaud you for hopping on. Thanks for joining us. This is a great community where we come and we learn, we share, and we actually implement, right? That's the whole idea behind it. Now, for my regular comers, I thank you guys so much as well. I hope that you're making progress, and I'd love to hear what kind of progress you're making. So let me know when you have here on the chat. Drop something in the comments. Let me know how things are going. Hi, Henrique. Hi, Eve. Thanks for hopping on. Now, before we get into the actual meat discussion of my topic today, and credit score is a pretty important piece of the financial puzzle that we all have to solve, I want to share with you a couple other things. Now, you know I love quotes. So I always spend quite a bit of time to get ready and to find something meaningful, to find a quote that actually drives a point home for me, but it also, how can I connect that? Is there a lesson learned? So my quote for you today is this: the real measure of your wealth is how much you will be if you lost all of your money. And this is an unknown author for that. And I think this is a great quote to think about, because a lot of times we equate our self-worth with our net worth, right? Which is, you could argue at times that might be a defining factor, but imagine a situation where you actually have no money. So how much will you actually be worth? Now, I am talking about the financial aspect of this, but there's much more that we can accomplish, right, with our finances, with our abilities to earn, with our abilities to stay on the top. So I want you to think about this quote, right? The point that it drives for me is that my abilities, right, my skills, my actions, and what I do as an individual, and you as well, is what's going to bring down the success. We just have to align ourselves with the right people and the right tools to help us get there. Now, how does this tie into the credit score, right, that I'm talking about, or credit report? Well, in the world that we live in, and particularly in this country, in the United States, right, credit is something that we need to be using, right, to our advantage. And so credit score, hi Shannon, hi Barbara, thanks for hopping on, ladies, good to have you here. So credit is something we use, right, or something is used to judge us whether we are trustworthy consumers. Okay, so I have some tips to share with you of how you can actually improve and how can you be better consumer with the better credit. Okay, now one other thing that we actually do, and what I'd like you to do as well, is drop a few comments in the chat and let me know what kind of money win you had in the last week. Now, a money win, and that's how I classify a money win, is something good that has happened to you, to your family, to your close friends, where you actually were able to stop, pause, and think about it. Hi, Greg. Thanks for hopping on. Okay, so reflection, okay, and gratitude is what I'm trying to teach you here as well. Because we can't just be running with our heads put into one direction and not seeing what's going on. That clarity that I was talking about is going to come from you actually assessing the good things that are happening in your life. Now, the reason I call it a money win is because, let's face it, everything we do has to do with our money, or everything we do will be required for us to have some kind of financial aspect. Okay, we're either going to have to earn money, we're going to have to spend it, we're going to have to donate it. So it's just how everything works. So a money win for me in the last week is I actually had I would call it an honor to spend some time on Saturday. So every year, one of the associations I belong to, and this particular association is called Financial Planning Association. It's a big association of financial professionals, so not just financial planners like myself, but all kinds of professionals that have to do anything in the financial industry. So it could be insurance people. By the way, Shannon, that's a good association for you to join. Hi, Diana, thanks for hopping on. So once a year, and this is across the country because there's 70,000 members, what they do is they put out these what's called financial planning days. Okay, so a financial planning day is where professionals like myself who are licensed and certified to give advice come out and give free financial advice and counsel people who cannot afford, for whatever reasons, to come and see us in our professional setting. So this year, I've done these in the past across different cities. This is in San Francisco Bay Area. I've done a couple in San Francisco, so this was more south around San Jose area. And so this was at a library, just a local library, and we had over 150 people who showed up. So there was, I think, probably around 35 professionals. So it was over the course of maybe 5 hours. So what we had to do is every advisor had a 30-minute session. Okay, so I had 3 people that I actually talked to, but it was interesting to hear the conversations and to hear the questions, because you know, you always assume that those who for some reason can't afford to come pay you right, the ongoing rate at your office, are going to ask you different questions, and it's not like that. They're asking the same questions, right? They have the same struggles, they have the same worries. They want to know how to do better. They want to know how one of my attendees, we call them attendees and our clients, had a question about how to pay the debt. The other one was interested in figuring out how to save more money. So that is what I'm talking to you about, right? That's what I'm advocating for you to be a well-rounded, educated consumer. So I feel strongly and passionately about, because that's something that obviously, you know, I give away. There's nothing for me to hold. My knowledge, my expertise, quite a lot. But when you sit in front of somebody who actually, right, looking at you, and it's just a different dynamic. I can't explain how. You actually have to be in that chair to feel, you know, to feel that. It's pretty powerful, and I'm glad I had the time. I'm glad I actually signed up to do something like that. So that's my money win, right? The goal is that the consultations and advice that I give to those people, I hope it goes a long way. I hope that someday I meet them somewhere, or they find me online and they actually let me know, look, what you've suggested for me to do actually helped. So I only hope to hear something like that. But let me know what your money wins are. I strongly urge you, if this is the first time you watching this show, I strongly urge you to start thinking about that. Pause and reflect back on what actually has been good. And I'm sure you're going to find more than just one thing. It's not like there's only 1 or 2 things that are happening. Hi, Mom. Thanks for joining. Oh my gosh. You guys, this is my money win. My mom is actually watching me live. Holy moly. Thank you so much. So here's what I'm talking to you about today. Credit score. Why do we need to make sure that our credit score is something that stays on the top, or we stay on the top of it? Now, recently, very recently, right, in the last month or so, when was the Equifax? I think a month or so ago, early September, right? One of the biggest credit agencies was breached into, and that's where our data, right, our social security numbers, our addresses, our all kinds of information is stored. Now, this is where the information is stored, but the reason behind all of that and why we as consumers, right, because we have no control over what those agencies do, right, but as consumers, we need to make sure that we do everything that is possible in our power to stay on the top, right? So a credit score is a specific number, right? And actually, I didn't know, I've really never paid attention, but I know that the highest score is 850, right? That's like, if you hear something like that, if you have a credit score over 800, you consider it to be the best, you know, the most credit-worthy consumer. Now, did you know that it could go as low as 300? I somehow did not focus on that. But anyway, so credit score ranges between 300 and 850. So somewhere on the spectrum, you as a consumer being evaluated how good of or how trustworthy you are if you go to a financial institution, whether it's a bank, a credit union, and you actually borrow money. Okay, so now we know this idea of having a good credit score from day one, right? We've been taught this at the very early age. Now I have some tips for you of how we can actually stay on the top, because as life gets to us and we get busy and sort of, you know we need to check a credit report, right? But what else can we do? Simple things that will make a difference for us. So number one, okay, and that is, so you know how, I'm going to use an example of a credit card because it's the easiest one that I can explain. So you know how, let's say you have a credit card that has $5,000 limit, just for simplicity of this example. So the tip number one is to make sure, right, that you're not using your entire credit limit. Okay, so because the minute you go over, so if you have $5,000 credit limit, okay, on your credit card, and let's say one of these months you need to charge a big, maybe you were buying tickets to go on vacation. So the minute you use more than 30% of your allowable credit, so let's say it's 5,000 and 30% of that, that starts to affect your credit report. Okay, or credit report as well as your credit score. Now, it does not slice and dice your credit score tremendously, but because that number, right, that 850 or 750, whatever your number is, has a lot of different factors that affect it and how it's being recalculated. So one of the tips is to make sure that you do not, it's called credit utilization ratio, that to make sure that you do not go over, right, a certain amount. So, and I've heard different ranges, so anywhere between 30 to 50%. Okay, so the minute you start seeing that, for example, you have a $5,000 credit card limit, right? The minute you start seeing that you're spending more than half of that, maybe it's time to call the credit card company and say, look, I am interested in having you increase my credit limit. And I guarantee you, right, I've done this many times myself, and I frequently recommend this to clients, that if you actually pick up the phone and you call, they were gonna have to check your credit score, right? And you give them your income and you ask them to increase your credit limit. Most of the times, I've never had a failure personally. Most of the times, they're gonna allow that. Hi Ella, thanks for hopping on. Oh, so Lori says if you go over your credit limit by $1, your score drops. Holy moly. Okay, I had no idea about that. Lori, you have a lot more experience working with the borrowers, but that's interesting to know. So again, if you're using a credit card for your purchases, right, on the monthly basis, and something, and you're seeing that, you know, you're using a lot more than your actual credit limit, then you need to consider that. Now, this is an example of just one credit card, right? Let's say you have a lot more credit cards. So you kind of need to know what your global credit limit is, right? So it's not just a credit card. You may have an outstanding auto loan. You may have student loans, right? So you kind of have to look at it. But I'm just giving you this simplified example in the way that the credit card works, because all of us have a credit card, and most of us actually these days, because we play the game with rewards and points, we use credit cards quite a bit. So, and what I found also and I've done this in the past, is that it actually makes sense to make those kinds of calls almost every year if you can. Why can't you ask for more credit? And they're going to be happy to give you the credit, right? If you continue, and this is going to be one of my tips later, if you continue, fulfilling your side of the obligation. So, okay, so consider if you've never done something like this is your chance. Pick up the phone, call your credit card company, say, I've been a long time customer, this is what I'd like you to do. And they may give you just a little bit, and they may give you just more than you actually anticipated. So the worst case scenario, they're going to say no to you. And so then you just call them the next time. It's not the end of the world. Okay, so now, another way, if you're not going to be able to increase your credit limit, another way for you to make sure, right? And this is a little bit different if you're carrying a balance on a credit card, but another way for you to make sure that you actually utilizing the right right ratio is to pay down the credit card, right? I wanted to leave this for the last discussion on this point, because is this the simplest thing to do? Probably. Is this something that everybody can do? I hope so, right? I hope you're not carrying a credit card debt, but if you are, you need to be aware of how and why, when you pull a credit report, why your credit score has a certain points, right? And what will happen when you pay off the credit cards, okay? So consider that. So it's either increasing the credit limit, right? But you can't do that hi Carl, hi Jack, thanks for hopping on. You can't do that every month, but you can pay off the credit balance or the balance that you owe on the credit card every month. So that's my tip number one. Number two, and this is something that I've actually discovered, and I just kind of came across talking about this to someone. So you know how you can, so every month if you're utilizing your credit cards, right? So I think this discussion would be mainly around credit cards because that's something everybody has. So if you use credit cards to pay for your bills, to sort of a way for you to manage your finances. And Lori says keeping balances at least 20% will help build your credit score. Okay, so there you go. So I thought it was sort of 30%, 30 to 50% is what was sort of the safe spot. So, and this is something that I've known myself before and I actually done it, but one easy way that you can actually just do, and so one thing to do is pull out all your credit cards, right? And I hope that you have not closed any credit cards in a while. And if you haven't, if you have in the past, that's fine. Maybe going forward, that's going to be one of the rules that you institute for yourself, is that you do not close old credit cards. And I'll talk about that in just a minute. So every credit card, right, and actually every debt, so credit card would be one example, but if you have an auto loan, if you have student loans, right, so every debt has an option for you to set up an auto pay, okay? I'm going to say almost every, right? There's just, in today's world, pretty much everybody can allow you to set up an auto pay. So the reason I want you to set up auto pay, so let's say you have 5 credit cards, okay? And today you're currently only using 1. So those other 4 credit cards are just sitting on your shelf not being used. I still want you to set up something called AutoPay. So AutoPay is an automatic payment that is triggered on or before on a certain date. So you have a certain due date by which you need to pay off the balance, if there is a balance, or make a minimum payment. So I want you to set up this AutoPay to be automatically triggered if the credit card has a balance. And I'll tell you how that actually saved my butt quite a few times. Some credit cards, right, especially the reward credit cards, I have, we are loyal United Airline frequent flyers, and we use their credit card. Now, it gives us great reward points and miles, but it has an annual fee, right? And sometimes, luckily, that credit card that we frequently use is something that we pay off every month, so it's not an issue. Sometimes, when you don't use a credit card for a while and it adds a annual fee to it, if you don't have an auto pay set up, it could actually trigger late fees. Now, that's something that if you don't have a balance on that credit card, you don't need to worry. It's not going to trigger any payments. But what I also like about that, even with the credit card, for example, 1 or 2 credit cards that you're currently using, let's say something happens, right, and you cannot get to sit down and pay your bills, or you may be a day late because you're traveling, or you have some work thing going on. So that auto pay is still going to trigger. It's going to initiate a minimum payment. And what you can do later, the next day or 2 days later, you can come back and still pay off the balance on that credit card. It is safe haven that absolutely everybody should have. So it's not just a credit card, but I would set it up for you if you have an auto loan. Student loans are a bit tricky, but I've seen, and I've done this myself too when I used to have student loans, is that you can have a minimum payment to go out. You can always pay more. So something easy, you set it and you forget it, okay? Now, my last tip for you is, I kind of mentioned it already, but how about those old credit cards? You know, I'll tell you a little bit about how I started with credit cards. I was a freshman in college, right? And I was already working by then. I worked all throughout my high school years. So I had a bank account, right? I had a debit card, but I did not have a credit card. I guess I'm not sure why I didn't have a credit card until I started college. And I remember the first year in college, they had these representatives from various banks just kind of standing in a corner. I went to Towson University. It's a pretty big school. So the campus was spread out. So as you're walking across the campus, all these people standing with the little clipboard, right? And they're like, okay, well, you want to sign up for credit card? We're giving away, I don't know, free t-shirts or something like that, right? So what the heck do you know as a freshman in college? You want extra money, right? So of course I signed up, right? I think I signed up for 2 credit cards. I still have those credit cards, by the way. I think one of them is Discover. It's either Capital One or I forget. Anyway, so it was $500. I was excited because then I can go out and, spend the $500. Now, luckily, $500. Hi, Andy. Thanks for hopping on. Yes, Shannon, that is exactly how everybody gets in trouble. Unfortunately, that's how they get everybody to sign up. Now, had $500 was pretty decent money when you're in college and starting out, right? Luckily, I was working, so I could pay it off. But it did teach me a lesson, right? And so the lesson that I'm trying to convey to you, whenever you opened your credit card, let's say it was 30 years ago, I hope you still have that open, because this is what makes up 15% of your credit score. So that 750, 850, whatever that number is 15% of that is consists of how long you actually had your credit report going. So if for example, credit card for most people, right, was the first thing that actually started a credit report, then automatically think about that. Why would you want to cancel it? If it's a little dinky $500 credit card that's sitting around, just let it sit there. So, I mean, as the time gone for me, obviously it's not $500 anymore, and I don't use it as much. It doesn't have any annual fees, but it's still around. And so what I suggest that you do, do not cancel your credit cards unless, okay, and I've had this happen to quite a few clients in the past, and you know, just think about this. So if you don't anticipate that you're going to be buying anything on credit and you really want to consolidate down things, then okay, so cancel it, right? Sometimes actually this has happened to one of my clients. Sometimes credit cards will be canceled because they're not used. Okay, so it's a little bit of a balancing act. You may have one of the advantages is to keep them longer, because that helps you build your credit score and your credit report, right? So if you've had it for the last 15 years and you want to cancel that old credit card, then all of a sudden your credit history, gets affected by that. So one of my clients mentioned to me that their credit, sometimes you have credit store, like the credit cards from the stores, like Best Buy, Bloomingdale's, I don't know, Macy's, Nordstrom, and things like that. Yes, Lori, cancel your credit card will lower your score. So it may not be that many points, but if you're not planning to buy anything on credit, then it may not be a big deal. So one of my clients mentioned to me, I'm trying to explain my point, is that their credit card, one of the store, I think it was Best Buy credit card, was canceled because of the inactivity. Okay, so the suggestion I have for that is that once a year, take out that credit card and go out and buy a tank of gas, right? Or go out and buy yourself a dinner, right? Or if it's a store credit card, maybe use it once in a while because you get points or whatever, you get the sale, extra percentage points on the sale, right? But pay it off right away, right? Again, that sort of keeps all of this. If you think about a credit score, I think of it as like a big giant pot, right? And all of these things are kind of like what goes in, and it sort of cooks and steams in there. And at the end of the day, you get to find out what your credit score is, okay? And so my last suggestion, right, started with this, and I want to emphasize this again, but you'll be surprised how many of us actually haven't done it in the last 12 months, and how many of us have not done it in more than 12 months. But the very simple thing is to check your credit report, okay? Come on, it's really easy to do. I've noticed a lot of credit cards these days. I know Chase for sure, because that's my main credit card. Thank you, Shannon. Offers for you to show, for them to show you your credit score. Now, I've tried it out on the Chase credit card, and it only shows you one of the scores, because there's 3 credit reporting agencies: Equifax, Experian, and TransUnion. I can never get these names down, but what would be neat when you pull your overall annual credit report and the site, so I have Credit Karma and annualreport.com. Annualreport.com will give you the 3 scores, because each of the credit reporting agencies collects information a little bit differently, right? It's the same information, but where the sources and where they're getting it from. So what you want to do is you want to make sure that you compare, right? Why does TransUnion report my score at this level, and why does Equifax, for example, says it's a couple points less, right? And so it's normal, it's expected that it's going to be some kind of variance, but if it's significant amount, again, if you don't know, right, this is where we started today. If you don't know, if you don't have the clarity, how are you going to be able to change and adjust and fix these issues as they arise? So that's all I've got for you today. Thank you, ladies, Shannon and Lori, and everyone else who was watching. Thank you so much for contributing. This is definitely an interesting topic. Shannon says, yes, I have a score over 800. Yes, actually, Carl was on the stream earlier. Carl does mortgages, and so we had a joint client for whom we're trying to get a mortgage refinance. And I learned something interesting too. I don't know how that affects them. It's just a point that I really didn't know anything about. But a score that is a credit score of 740 points or less actually gets you less favorable rates, whether you're refinancing or you're buying something on credit. I had no idea. I never really had sort of a gauging point as far as, okay, you know, because that 740 is still considers, I think, is still pretty good score. So anyway, I guess live and learn every day. I appreciate you guys hopping on. I hope this was useful. And please do. Those are the simple tips and tricks that everybody can set up, right? So that at the end of the day, right, if you haven't pulled your credit score yet, go do that. 6 months from now, you're going to be able to check it again and see how things improve. Okay? Thanks so much. I appreciate you watching, and I will see you next week.